Refineries across the world are actually refusing new business because they're running at capacity. Okay, the refiners of gold and silver around the world are running at capacity. So the boom around the world that started back east and in the BRICS nations has made its way to the US, and it has overwhelmed at this point the supply chain. So once the retailers in the US run out, there's not going to be equivalent amount coming on, because then you also have to add in the supplies from the miners into the industrial markets and the refiners. The miners, particularly in silver, have in the last 4.5 to 5 years run 1 billion ounces short. The refineries across the world.
Hello, everyone, and welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and before I announce my guests, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products, or services. Always do your due diligence and consult with your financial advisor. My guest today is precious metals expert and analyst, and my dear friend, Mr. Rob Kientz. Rob, thank you so much for joining me today.
Thank you for having me back on. I appreciate it.
Thank you. Rob, we have a lot of things to discuss today, but maybe we should start with the supply tightening signals. Given the complete chaos you described, I saw your tweet, I believe yesterday or the day before. What specific indicators, such as inventory drawdowns or at major wholesalers or delivery delays, are pointing to a tightening supply that could, let's say, fuel panic among physical metal buyers?
Yeah, we'll get into that in just a half second. I'm going to back up and go one step before. Usually when retail gets involved in the market in the United States, they start with the ETFs. And over the last 6 months, we've seen an incredible amount of buying. There was, I think, 200 billion that went into the SLV, which is the main silver ETF. And then I think it was something like 500 billion in the broader group of ETFs in August alone. Now, that's not all U.S. investing, but the U.S., because there are some that are across the pond. But the fact that retail investors across the world and in the West were getting into silver and gold in ETF format said that the generalist investors were coming back in the market, and that's always a sign of a boom. It always has been. It was during 2008 through 2011. It was during the short market upside win in 2016, and again 2020 to 2021 during the pandemic. So that happened first, and so I began saying, I think we're about to hit the physical rush. And man, right after I said that, maybe a couple of weeks, we started to have supply tightness in gold and silver. So I run I run nationally for Kinesis, their bullion store here in the United States. Of course, they're an international provider of gold and silver, both physical and the digital form. I focus on the physical. So I run the store, and we had run out of gold, and we had been out for a while. I mean, our run in gold had started before. And then I had one purchaser within the last 3 weeks buy $1 million in silver out of our store. So that told me it was coming. And then right after that, I noticed the end of last week that we're starting to have tightness in the two most popular physical products in the American market. And it's always been this way and will always be this way just because of where we're located. American gold and silver eagles are the number one product, always have been. And Canadian gold and silver maple leafs are the second most important. And then everybody else in the market really vies for third place. And that third place market's really big. So we have a lot of producers here. We have tons of precious metals companies. But when you see the ETFs start to have a lot of inflows, and you see a confirmation signal that American gold and silver eagles and the Canadian gold and silver maple leafs are sold out, then that's when you know you're in the middle of a precious metals boom. And Monday, I had customers coming to me looking for that. And usually, I sell from the Kinesis store, so I'll refer them to other people now. But I went and looked. I checked all my wholesale suppliers for gold and silver eagles, and there were only 288 total, not 288 tubes, but 288 American silver eagles left across all of the Dallas-Fort Worth wholesalers. Dallas-Fort Worth is a huge metropolitan area in one of the biggest states in the United States, in Texas. And Dillon Gage is here. They're all over the U.S. Elemental's here. They're all over the U.S. And then we have Dorado. Those are the three big ones. And they were almost completely sold out. And then on the American Gold Eagles, they're completely sold out. On the Canadian Gold and Silver Maple Leafs, they're completely sold out. And so I bet if I checked this morning, I haven't yet, but I bet if I checked this morning, there are no American Silver Eagles available. They're gone. And literally between Monday night and Tuesday, there were like a few, maybe 12 Canadian Gold Maple Leafs, and they sold out overnight because I had a customer that wanted them. I was going to refer them over to a friend that sells them, but the wholesale market's gone. It's completely bankrupt. Premiums, and that's on the wholesale side. Now, the retail outlets in the United States still have them because the retail outlets knew what was coming. They saw the ETF inflows, and all the retail stores in the U.S. are very smart. They know when their customers will come in and buy the bullion or buy it online in places like APMEX or JM Bullion or SD Bullion, Miles Franklin, all these guys. So what happens is these retailers will buy out the wholesalers anticipating the run. And the other piece of it is when you come out of summer into mid to late August is usually when precious metals start to boom up in the US, because during the summer people take their vacations and they're not really watching the markets as much. And this is also can be true of stocks and bonds, by the way. So we started to, but the funny thing is we never had that big lull in the summer in the physical markets. The physical markets were actually doing well at the end of July and into August. And I thought, I think this year could be different. And so not only have American consumers bought out the two most popular products, you also have Diwali and these other celebrations in China and India, and the dowries and the marriages and things that typically occur. We call this the love trade. During the third and fourth quarter of the year, you'll start to see precious metals prices rise across the world because of that increased physical demand across the world for these ceremonial things. You've got the love trade going on. You had an abnormally robust late summer market for both the ETFs and the physical in the US. And now we're sold out of the two most popular products. Now, what you can still get in the American market are regular rounds and bars, the non-sovereign minted stuff. But the sovereign minted stuff started to sell out. Also, Austrian Philharmonics sold out, the gold ones. I haven't checked the silver ones. A lot of the popular third sovereign mints like the UK mint, the Australian mint, the Austrian mint, those are starting to sell out as well. So what happens in the US is the sovereign coins sell out first, and then you go to the rounds and the bars in the bullion. And basically the only thing left in any amount of inventory that I can find in the US through my wholesalers is the rounds and the bars. And so I expect rounds and bars premiums to start coming up. And again, getting back to the retailers, that's all wholesale. Getting back to the retailers, the premiums on the American Silver Eagle APMEX, the biggest U.S. retailer in the U.S. out of Oklahoma City, was at $12. And I suspect by the end of the week, it's going to go to 20. And I was talking with Daniel Diaz, who was talking with David Morgan, the silver guru. Daniel Diaz, of course, runs Citizens for Sound Money as executive director. He also sells. And we're all talking back and forth about it across channels. And, we expect at some point American Silver Eagle prices to double if this boom continues, meaning if silver price is 50, the American Silver Eagle is going to be 100. And we saw that not too long ago. A couple of years ago, there was a little supply shortage of American Silver Eagles because the mint couldn't pump them out fast enough. It was just temporary. It lasted about 3 weeks. American Silver Eagle prices literally doubled spot prices. And that was during a little temporary issue 2 years ago. In which the mint ran out of stock. The mint is, again, out of stock because the wholesalers are out. And one other thing I want to throw in there, I know I'm throwing a lot at you at once, but the refineries across the world are actually refusing new business because they're running at capacity. Okay, the refiners of gold and silver around the world are running at capacity. So the boom around the world that started back east and in the BRICS nations has made its way to the U.S., and it has overwhelmed at this point the supply chain. So once the retailers in the U.S. run out, there's not going to be equivalent amount coming on, because then you also have to add in the supplies from the miners into the industrial markets and the refiners. The miners, particularly in silver, have in the last 4.5 to 5 years run 1 billion ounces short. So that's why you had the squeeze in London. It was reported that the COMEX in the U.S. was sending silver to London to ease supply constraints. And it came out on Bloomberg, I think it was like a week ago, I reported that had temporarily eased, but the futures and the OTC markets still had elevated prices because basically they didn't believe it would be enough. And now in America, we don't have enough bars to continue sending them. So the supply chain has already done what it could. And I think the next wave of this we're going to start to see in the next few weeks, in the next couple of months, is legitimate supply shortages where we simply cannot service the silver market. Gold is a little bit different. Most of it's still above ground. You know, if the price goes high enough, some of it will come back. But silver is different. Most of it's used in products that we use every day. Only about 28% is recovered in scrap. The other 72%, once it's out, it's out. It goes into landfills, or it's in all the things that we use, all the technology. 500 ounces goes into a Tomahawk missile, and it literally gets evaporated, you know, whenever we use those missiles. And by the way, that's for all missiles used around the world, whether Russian, Chinese, whatever. So if you look at a global geopolitical conflict, we're evaporating silver every time we launch a missile. So all of these things have bankrupted the world of silver. And I think we're in a legitimate silver squeeze. And again, I'm going to keep going just for a minute. TD Securities, a major brokerage firm here in the US, has said that they think the physical silver squeeze is real this time and there won't be enough inventories. Robert Gottlieb of JP Morgan, the biggest silver trader across the world that is in all markets, including China, the US, London, Russia, India, Dubai, all of them. Robert Gottlieb came out and said, we're running out of silver. So even the big market traders across the world are saying we're out of silver. So this is a legitimate silver squeeze going on. And so I think silver prices are going to launch even faster and higher than gold is going right now.
Great analysis. You said a couple of unbelievable things. Thank you for this. You actually answered the big portion of my next questions, but nevertheless, let's keep on the shadow takedown impact on supply. If a shadow takedown is indeed occurring in the gold and silver markets, how might it exacerbate existing physical supply constraints? And could this push premiums to levels that trigger widespread panic buying among retails?
I think so. And my analysis last night was a goofy stuff is going on. So let's get into that. So I've followed the COMEX for many years. I've been writing about gold and silver for 16, and I've really focused doing videos. I've written articles on it dating back to my days at Seeking Alpha in 2010, but where I was syndicated across a lot of American media at the time, you know, Market Watch, Yahoo Finance, all that kind of stuff. And then fast forward, I do mostly social media now. I do a little bit of written content still. But I'm, you know, the last 6 years now, I've been covering the COMEX in detail, looking at their statistics, looking at the market for 6 years. I've seen something I've never seen before. So the October 21 data is not available on the website, but trading was allowed to continue because it was the biggest smash in over 5 years, almost 10 years on the COMEX market in both gold and silver. Okay, so we're having one of the biggest price takedowns in history. And the way that market works, the futures market works, is these systems are all electronic, and it's based on nanosecond delivery of data. And so all of these markets, whether it be the stock market, the commodities market, are all trading on the fastest systems possible with fiber connections, because a nanosecond in the market can mean the difference of you being able to hit your bid or your ask, right, and able to execute your trade. So if you're one of the big trading houses that trades on stocks, and we'll just use COMEX, for example, we'll just talk about commodities, but this is true for all American markets. The nanosecond difference matters in you being able to execute a trade and making money, okay? Because what happens is these markets really, they're not physically driven markets. Less than 1/100th of 1% in an annual basis of these trades are actually settled physically. It's basically a paper market, and it's a future market, which means it's a gamble. You're looking at what the futures could be in the future, or what the prices could be in the future in the US. And the reason this all started was legitimate hedging for silver producers, farmers, all that kind of stuff, to say, well, if I know 6 months from now I'm getting my stuff to market, I need to know my price risk. I might buy a futures contract to cover the other side of that. So if you're a producer, you're going to buy a short, because if the price goes down, you want to recover that in your short position on the market. If you're a merchant and you're going to be using the product, you're going to buy a long, because if the price goes up, that raises your input costs, right? So there is legitimate hedging, but it's a fraction of the market. The most of the rest of it is the financial houses and the bullion banks going back and forth, trying to make money off of millions of positions that they're holding in a leveraged trade, meaning they put this much money up for each contract, and that's how they make a ton of money. JP Morgan came out a few years ago when they were fined by the CFTC $920 million for manipulating the silver and treasury markets, and admitted to it. The traders admitted to it. They said, well, this is a drop in the bucket because we make $1 billion each year just on the gold and silver trade alone. So they just kind of laughed it off and said, no big deal. You know, that's it. That's a year, but we've been doing this forever. So that's the way the market works. Now, getting back to my analysis, So I'm sitting here watching it, and the October 21st data is not available. And they do snapshots throughout the day on the CME Group's website, which are the ones that run the trade in all commodities, not just gold and silver, but the commodities complex, oil, sugar, hog futures, all that stuff, wheat, all of it, platinum, palladium. The metals data was not available on the 21st. And I'm looking at going, the snapshot at 9:30 a.m. Eastern time, 1:30 p.m. Eastern time, and then the markets close in the afternoon, you get the final numbers. I've watched this for years, and it was not available on the 21st. And I'm like, wait a minute. If it's not available on the 21st, how are you trading?
Yeah.
How are you able to trade and not put the data out? So I went and researched, and I said, well, I also know at the same time, we have all these cloud services coming up, all these data centers, and they're using a lot of grid power, and the grid in the US is starting to be strained. It's actually been talked about by the Trump administration that all these data centers powering AI and the markets and all this technology have strained the very old American electrical system, which is, the technology dates back to the 50s, and we really haven't updated it. And so now we don't have enough power coming online. So Amazon recently did a deal for nuclear reactors to power their data centers. They're buying 12 nuclear reactors to power just Amazon's data centers. But that hasn't happened yet. That's a couple of years out. So Amazon AWS, their big cloud system, was having power failure issues. And I noticed it because one of my insurance companies and one of my shippers companies, I couldn't access them, and they said, it's AWS, their data center is down. So I went and looked online at Google, and I typed in CME Group and AWS. And wouldn't you know, the first link said the CME Group moved their servers over to Amazon Cloud Services. So it would make sense that the trading data wouldn't be available, that they wouldn't be able to trade. So I thought, well, wait a minute. If you can't trade, how can you have the biggest takedown in the last 10 years in gold and silver simultaneously on the 21st if you can't trade? So if they, and we haven't had word from CME Group yet, but if they come out and say that the Amazon Web Services, the cloud services being down affected the trade, and that's why they couldn't print the data, I'm going to call BS, because the market was still trading. How can that happen? It would have to have meant that they were allowing off-market trades and to settle without the national trade settlement, the electronic trade settlement, and that they were going to some sort of manual trade, which would allow the main trading houses, the four big banks in the U.S., to manipulate the market. Why? Because at the same time, the government has had shutdowns, and the CFTC came out at the end of September and said, I think it was September 23rd, and by the way, that's the last date of the commitment of traders reporting that they have available on their website. They said, as of the 23rd, we're shutting down all of our regulatory functions over the markets. The regulatory operator in the U.S. is not operating since September 23rd. They cannot watch trades. They cannot get the data. The people aren't working. Okay. They just basically have enough people at their offices to keep the lights on. They're not monitoring the markets, the commodities markets right now. And they've got a press release on the top of their website, cftc.gov, saying that. So look at what you have. You have the biggest takedown in gold and silver in the last 10 years in the American markets. You have the CME Group, which runs the trading, not reporting the data. You got goofy stuff going on with the Amazon Web Servers in which they run, which tells me they can't be running a fully functional market. And the regulator cannot watch what they're doing. This stinks to high heaven. I'm sorry. There's something seriously wrong with what's going on with the trading markets in commodities in the U.S. And I think it could be partially as a result of the actual physical silver shortages reported in London first and then around the world that have come to the U.S. And yes, to answer your question, it's going to create a panic. Absolutely will create a panic. That's why gold and silver eagles ran out. That's why Canadian gold and silver maple leafs ran out. And it's why the other secondary sovereign coins have started to run out. And the only thing left is going to be the generic or the independent mint coins and bars. That's the only thing that's going to be left. And when that's run out, again, I will tell you, the refiners are running at max capacity, and industrially, there's not enough silver output from the mines. So silver in particular, I don't know where we're going to get it. And one last thing I wanted to tell you, the Trump administration knows this. This summer, and I've been calling for this for 15, 16 years since I've been covering the market because I saw it coming. I said they need to declare silver a critical mineral. This summer, Trump administration declared silver a critical mineral, and 2 weeks ago, they committed $4 billion to rebuilding the U.S. silver market, $1.5 billion to buy silver, and $2.5 billion to rebuild the supply chain of silver processing and mining in the United States. And this week, at the beginning of the week, I think it was Monday afternoon, Trump came out and announced that he had done a deal with Australia, the biggest commodity deal from two Western powers in history,
Yeah.
biggest commodity deal for two Western powers in history, $8.5 billion between the United States and Australia for all critical minerals, including rare earths, silver, scandium, fluorspar, all of them. So the American government is responding, basically admitting that we have widespread shortages in critical minerals, not just silver, but also all of these other ones, and pouring billions of dollars into rebuilding the market. Why? Because China owns 95% of the refining market for rare earths, scandium, fluorspar, and they own a huge part of the market for gold and silver as well. The United States has finally woken up, and the Western powers have finally woken up, and they're finally doing something about it. My question is it too little, too late in silver? Because it takes 5 to 7 years to get mines permitted and the mills built and the output, the drilling. For 16 years, I've been to mines all over the Western U.S. and Mexico, talking to miners, metallurgists, geologists. You cannot simply bring on several 100 million ounces of silver input in the short term. Even if they fast track government permitting in Mexico, which they're not doing because Mexico has slowed down permitting, and the western states in the U.S. where most of the minerals sit, especially California, has slowed down permitting, the federal government would have to push it. The Mexican federal government would have to push it. And then you would have the government literally have to intervene and finance the mines to do their drilling and their development and their 43-101 compliance paperwork, and then build the mill to get it to. And even if they fast tracked everything, it would still take years.
Yeah.
So we may be entering a period for the next 2 to 5 years where there is not enough silver available, not only for investors, but to make all the things that we rely on, including the military, healthcare, the internet, all of it. This is it was silver specifically, this is a very critical problem that is becoming an existential problem to the entire world, not just the West. And, I called it 5 years ago when I said we're in a commodity wars, and we're firmly in the commodity wars right now, big time. And you're starting to see it with all the stuff that's going on.
Yeah, I agree with you. And one headline today, before I was preparing for this interview, caught my attention is that India sets silver as collateral for bank loans. That is news
Oh,
from today, a few hours ago, I believe.
wow.
Capping gold at 1 kilogram, silver at 10 kilogram, creating an industry-shaking 10-to-1 monetary metal benchmark. What do you think of that?
That does not surprise me at all, because what happened with India is when India reset their currency a few years ago, I don't know if you remember this, they limited gold imports because when they reset the currency, the Indian people weren't too happy. They were showing up to banks and not able to get. Whenever you do a currency reset, it's not picking on India. Whenever you do a currency reset, the old currency dies, you get a new one. They have to do bank holidays and things until they get the new stuff printed, and they have to reset it. And basically what India did was, they added some zeros and issued some new currency, sort of like what the Weimar Republic had done and Zimbabwe's done. So anyway, that led to them limiting imports of gold. Sorry, I said exports earlier. Imports of gold, because they didn't want the people buying gold because there was a run on gold in India. But they didn't set the same import on silver. And so for the last few years, the amount of silver imports to India have been going absolutely nuts. And I just reported on my channel last week that smuggling on my Twitter feed, that smuggling into India of silver is at an all-time high, and the government's basically allowing it to happen. They can't stop it. So you can't stop the flow of the metals. I don't care what the government does. When the people want the metals, they're going to get the metals. And it does not surprise me at all with all the silver coming in that they would do that, because silver is so important. And I think that India sees what's going to happen to silver. If you combine the shortages with the industrial demand, with the monetary demand on silver, this could be an absolutely explosive market, and it could help India catch up to some of their debt problems. If silver really rockets, it basically is a way for them, excuse me, to guarantee their loan market. What does that do? It guarantees their debt. What does that do? It strengthens their new currency. So that's an absolutely brilliant move by the Indian government if they're doing that. I actually applaud them for doing it. I think it's very smart and very prescient of them to look at what's coming in the silver market and to see our biggest upside that could help us erase some of this debt and some of our currency issues could actually be silver, not gold. Now, historically, gold's been it, but given that silver is so more used industrially, it's such a shortage, I think it's a brilliant move by the Indian government to do that. I think it's actually very smart.
Agreed. Rob, in the context of the supply and future market chaos, like you noted, what strategies can retail investors use to secure physical gold and silver without overpaying during a potential panic, especially if shortages intensify in the coming weeks?
Well, in the US right now, I can get bars actually below spot because there's an excessive bar inventory that's been sitting there. Now, why is that the case? Well, I thought you said there are shortages. Well, there are. But if you look at the characteristics of the American market, they go for the sovereign coins first. When I ran my coin store, and now that I'm running a national a retailer that basically does not sovereign, but does the coins and bars, I've worked in that market for many years. And even before, I ran all that, I was doing a lot of internet sales for other firms, for major firms here in the US for 6, 7, 8 years. So I've about 10 years experience selling physical bullion in the American market. And so what will happen is the sovereign coins run out first and it depresses the prices of the bars because people go for the coins, it raises the premiums. Once the premiums get to a certain pain point for Americans and or you have shortages of those physical sovereign coins, people immediately go to bars. And that's what's happening. And that's why at Kinesis in the last month, we had one person buy over $1 million of our silver coins and bars because we're starting to see that rotation out of the sovereign coins. The premiums are high, they're not being replenished, and people are going to coins and bars. But right now, across the US, there is enough coins and bars available at lower rates. So there's nothing wrong with coins and bars, by the way. Silver, as far as I'm concerned. Personally, I saved a lot in what we call old junk silver, which in the US is pre 1965 coinage, which has 90% or 40% silver in it because it's American minted and it was running at spot for the longest time. So that's how I invested, even more than I did American Silver Eagles, because I thought, ooh, that, it's a government printed coin. Everybody knows it has silver in it. I'm getting it spot for no premium. So you're still going to see some supplies of junk silver around. The market has gotten wise to that in the US, so there's not going to be as much of that available. The premiums have spiked on it, but you can still get the independent mint coins and bars at good prices. That's where you're going to want to go to get your gold and silver. You could say, well, I'm waiting on those American Eagles to come back, or the Canadian Maple Leafs, or these other ones like the Austrian Philharmonics, the UK Britannias, which by the way are so gorgeous. I love those
Right.
Commonwealth mints. I have to say this: the Royal Canadian Mint, the Australian Mint, and the UK Mint do some of the most beautiful designs there. I love them; they're beautiful. But those are starting to run out. So where are you going to go? Go to the independent mint coins and bars. Go to reputable dealers that have a reputation, and make sure that you're getting quality product. If you're going to go to your local coin store, make sure that they have the testers available, the ones that are magnetic, what they call magnetic resistance testing. They shoot current through it using magnets to confirm the actual content of the coin. Make sure they're testing that for you because the secondary market, there have been some fakes. We've seen some fakes in US government coins and independent mint coins come up from Mexico, some from China. I saw that in my store many times. Make sure they're tested. So make sure you're buying reputable, but that's where you're going to find your bargains right now. And I would say this, if you've made the decision, like you said, consulted your financial advisor about getting into gold and silver, and you made that decision, go do it now. Do not wait because a month, 2 months, 3 months from now, I don't even know if that inventory is going to be available, especially in silver, given the shortages. I think there will be some gold available even, in the next year to two, because even though there's huge demand, the gold miners are actually have enough output. So short of a complete currency collapse and everybody going straight to gold and silver, I think gold is going to be available. It's going to be higher premium. It's going to have higher cost. But silver, I don't know if we have 6 months of silver. I don't know if we have 3 months of silver. And I'm not talking in the US, I'm talking across the world.
Globally,
It has
yeah.
become an existential crisis in silver. So if you're interested in buying silver, do not wait. As soon as you see the video, go to your reputable dealer, do your research on what you want and go ahead and make that purchase. Do not wait. Do not wait. Do not wait. Do not wait in silver.
That said, Rob, final question: where do you see gold and silver price 6 months from now and 12 months from now?
Well, I think that the U.S. government, we were talking off air before the interview, U.S. government has officially announced a recession. And what's different this time in the metals markets, usually in America, they take off after the recession. In fact, they'll announce a recession, everything goes down for 60 days, and then gold and silver rises above all else. Why? Because you have the derivative selling in gold and silver for covering. Why? Because people are pulling out their money to pay their bills because the economy is collapsing. We've had the run in gold and silver this time way before the U.S. government ever announced a recession. Personally, looking at the numbers, I think we're in a recession, but it's not turned being like the Great Depression or anything. It's not like you know, yeah, there's some issue with jobs. Yeah, there's very high inflation, but at the same time, we haven't collapsed, and we're still having this historic run where gold has more than doubled in the last 18 months, and silver's more than doubled in the last 18 months. And the biggest move on the chart since we've been recording gold and silver moves since 1971 when we came off the gold standard and gold was pegged to the dollar. We've already had the biggest run in an 18-month in U.S. history well, at least dating back to the Federal Reserve in 1913, when we measured this in dollars, when the dollar came to being. And if you look at what the de-dollarization going down across the world, for the first time this year, foreign reserves of U.S. dollars was less than 50% of all foreign reserves. Okay, for the first time in history, since the dollar became the reserve currency of the world, I want to say it was 4 or 5 months ago during the summer, it was reported that governments had dumped so many dollars that now they held more other currencies than they held dollars in foreign accounts. Okay, that's dangerous because it means the end of the dollar is coming. It may take a couple of 3 years, but what they've got waiting on the sidelines are going to be the CBDCs. And I'll tell you right now that digital currency, when controlled by the government, we don't want that because it allows the government way too much control. There's no free market on money at that point, and you're never really going to get your value for that digital currency, I don't think.
Yeah.
So I think in the next I think the world is realizing that, to be honest with you. I think they've woken up. And I think what you're going to see is an extended bull run in gold and silver. One of the chartists, the Elliott Wave analyst I respect the most, Avi Gilbert, who writes for Seeking Alpha, does a really great job, has said if silver surpassed $48.30, we're moving into the last big super bull run of silver. And guess what threshold it crossed this morning? $48.30. And he's had the most correct technical calls of gold and silver I've seen over the last few years. He has a history of doing it. We used to write back and forth each other as early as 2010 when I was writing for Seeking Alpha. So he's basically called the massive silver market is here and it's not going to stop running. Now you're going to have your pullbacks along the way, but it's not going to stop running. I'm not even going to give you a price target because I think the world is with de-dollarization and the metals booming. I think the world has moved to pricing everything in gold and silver, not pricing in dollars. So I don't even care what gold and silver goes to. I just think it's going to become de facto money while the US dollar is experiencing all these problems. And, I've said before you could see silver at 600 and people think I'm nuts. I'm like, no, when you take into account all the dollar printing already happening and the dollar's rushing back to America, that's going to create massive inflation in America, much more than we've seen before. We peaked a couple of years ago at 9.9% inflation officially, where it's really running 15 to 18. I think we could see 30 to 40 to 50% annual inflation in the US within the next couple of years. Who knows where silver goes? It could go to 1,000 or more an ounce. Gold wouldn't surprise me if it hits 10,000. It seems absurd. But again, we're not pricing gold and silver in dollars anymore. The markets are pricing everything in gold and silver. It goes back to Basel III, making gold explicitly a high quality liquid asset. And you pointed out the Indian government guaranteeing loans in silver. What are they using as money now? Gold and silver. So everything now, all the markets, the stock markets, bond, real estate, even the crypto markets are going to be measured in gold and silver, not dollars, not pounds, not yuan, not pesos, not any of those. We're there. So pick your price target. We're probably going to hit it in the next few years, I think. And that's why if look at what the Indian government's doing. Last one, I'm going long on this, but I want to make the point. The Indian government's using silver to help address some of the currency and debt problems they have. If you want to survive this oncoming recession, which I think is going to turn into depression and deal with all the inflation coming, do the same thing. Take your signal from the world, take your signal from Basel III, equating gold to the highest quality liquid asset a central bank can have, which they made it equal to their own currencies and their own shares of the central bank. They're saying gold is money, and India is saying silver is money. So you want to do the same thing, and that's how you're going to survive the coming onslaught that's coming in the world economies.
Good point, Rob. How can people reach out to you?
Well, they can find me at the Freedom Report. We've renamed our channels last year. It's the Freedom Report, Freedom_RPT on Twitter, and Freedom Report on YouTube. And we started a Substack. We're now writing at freedomrpt.substack.com. They can find me there as well.
We will leave the link in the description of this video. Rob, I want to thank you so much for coming to the show. Always a great chat, always learning something new. Thank you.
Thank you for having me on.